From a purely valuation point of view, yes is the answer. I think that the U.S. market is indeed priced for a V-shape, which is probably just another way to say it is priced for perfection. But right at the minute, one has to be quite careful because valuation doesn't seem to be the main driver. It hasn't been for a while, certainly since we bottomed in early April. It's much more about liquidity and sentiment and the market's expectation of a full and fairly quick recovery. So a shift towards something outside of the U.S. essentially is more to do with a view that at some point you're going to have something akin to a more fundamental approach to pricing. Right now you have to be pretty careful because there seems to be a preponderance of liquidity and momentum trading going on in pretty much in all markets. Emerging markets not excluded either.
Oh, absolutely. You said it on that front. But what are you buying? Where is it that you're finding value within Europe and Asia broadly?
Well, I think in the case of Asia, we find safety in the fixed income side of the market. I think that the risk of additional downgrades at the corporate fixed income level in Asia is fairly well contained. So that's something of a haven, but you still get your income. In Europe, you have to be a little bit more careful. I think that you can probably take again something of a defensive stance in European stocks. And it's probably more a case of avoiding the ones that have like obvious issues. Maybe on the financials, you want to be careful not to overexpose. But Europe has a fairly reasonable, let's say, on the medical and sort of pharmaceutical. You can maybe look at some of those areas. And there could also be, one or two others that have like maybe been sold off too much. But it's more a case of, make sure you're not too heavily underweight there because, like I say, there could be, from a valuation point of view, there could be sectors that are more interesting than where the U.S. is pricing at the moment.